Hello, everyone. It is Matthew. It is 6 p.m. Eastern Time, May the 10th. It's a Sunday, and I like to do my weekly analysis, get into the groove of things. Even if I don't enter a trade, I like to just have a rough idea of what I'm looking at. So let's start with the dollar index. So we have, and I like to start with my daily chart, and we are off to the races here. So let's zoom out. Let's take a look. We're clearly in an uptrend. We're above the 200 EMA. But I believe now this is right now the dollar is in a indecision area for me. There's nothing that I can sink my teeth into. Even if you were to look, this is called the climax here, and then it drops down and starts entering into the sideways consolidation area. I would only want to start trading at these extremes or breakouts as price carries on. So for me to jump into a trade, especially on the dollar at this point, I'm not interested. I'd want to see there, or if it broke out, you take it there. Ideally, it runs off that way, or vice versa. So it's called a change of polarity. It's exited the pattern, and you're going to be watching for this area of resistance. It pulls back, retests this area, and travels on. What I would be interested in seeing is a confirmation in the candles and that sort of thing. So I trade largely price action. I trade largely areas of interest. If you see this highlighted zone that I've already got up, you can see that I had this up for quite some time. Sometimes I wish it showed on indicators when you placed an indicator. Oops, pardon me. Um, when you place an indicator on a chart, but that's been on there for a little while, and we've had price run up certainly a few weeks, and this is a weekly pattern. A lot of you guys out there want to be trading. You want to be down at the 1 minutes, the 5 minutes. We are not computers. We are up against them, and at those time in those time horizons, you're trading even more so with computers, and I don't suggest it. And it is difficult to start getting yourself disciplined enough to wait for things to come to you. This is a hard skill to learn, and patience is even harder, especially when there are losses maybe in your past, the last several trades. You just want to get back in there and earn it back, or maybe you have a winning trade moving, and you just the thought of losing that unrealized profit really starts to irk you. So this is a patience game, and it only comes with time, and you just have to put the time in. But you can see where price rolled up, hit that. Now these are on the weekly chart, so let's drop down, and we have that consolidation period that we're in. So the dollar isn't giving me much of an idea, but when I drop over to the Euro USD, to me, I see upside. I'm not in this trade. Um, I am in the. This was from last week. I took the US Swissy short. Um, I just want to full disclosure that I'm in that trade right now. I'm not super confident in it, and if it's a loss, it's just one of many that I'll have this year, and it's part of the system that I trade. But I'm waiting for more of when you talk the dollar index and when you talk the euro dollar, there's negative correlation. So I'm just waiting. The patterns look similar. I'm just waiting for things to shake out. I'm waiting for things to tell me what's what, and I just don't have a clear pattern at this point. If as we start to get down, price started to return back to this area, I would make more educated decisions. But you can see we're along a trend line. We have tweezers, or I know some guys call them so many different things, but tweezers would be a decent explanation. And then you have over on this side that same similar pattern. Now, is that the pattern that continues on, or does it break and fall through? I don't know. I remember when I was learning this stuff, someone mentioning sitting on their hands or not knowing just seemed baffling to me. But that's when you really start to enter into your professional phase as a trader, that you say, you know what, I don't know, and that's going to really help you in the long run. Stay away from trades that are low probability, because all we can do is trade high probability setups with risk management, and that's our winning system. Okay, so let's move on to, well, let me just have a quick look. Like obviously we're in a downtrend here. We have quite a bit of reverberation, but we also have an area down here and an area here where if you look left, um, these are going back some time, but this area will matter to traders because we have come down um, in this beautiful downtrend. Now, as I said, in my opinion, I'm looking for a breakout to the upside, but I'm not there yet. That's just my bias, and I'll wait for things to confirm that for me. So moving on. So I'm trying to leave my charts a little bit cleaner for you, but this is something I use a lot. You've had a really strong run up, and you're having price pull back. Now, anyone who follows me knows that 50% fib level is my sweet spot. I wait for price to return back to these levels, to relax back to these levels, and then I enter. A lot of times on limit orders, meaning I haven't done anything. I've set my risk management. When you start using Fibonacci's, you can start getting out here. You can start maybe even tightening things up. You have a third pivot. Wow, that would add support. You have a 78.6% fib level. Geez, that would add support for price. You have the second pivot. You have the 61.8. So when you start trading these patterns, you can do stuff like this that is going to tighten up your risk management, but then also, and pay no attention to these. I don't use TradingView for execution. I'm just toiling away, but to the numbers on here. But if you start, going into these zones where you can enter and allow price to be rejected by so many other reasons, there's, to me, you have you have a whole number in there. You're switching from 103 to 104. You have the support, which I would say has already been kind of enacted in this trading. You have a 61.8. You have two pivots. You have previous support and resistance zones. So to me, you have a lot going on and a lot of reasons why price would be rejected. And that allows you to start tightening up. Instead of having to use that as your support area, you're starting to tighten stops up, if that makes sense, is how I look at markets. I trade support and resistance, Fibonacci, and I trade waves, and it's not a difficult system, and that is where the sweet spot is for me. When I first got into this, I had a billion indicators set up. You couldn't even see your price action. And look at any kind of skill that anyone's developed. Over time, it's simplicity. Over time, it's just the drummer and a more simplistic drum kit, or the guitarist and the more simple riffs, instead of trying to put so much together in their music or in their profession. And that's how I view trading. Is we're just going to find waves, we're going to wait, we're going to listen to the market, and we're going to trade support and resistance with risk management and asymmetrical risk reward. So in this theoretical trade, we've waited for price to come down and hit our zone, and in this case we're at a 50% zone. What that does is, well, this is a one-to-one, but what that does is it gets us a little tighter, and instead of out here where now we're losing that risk reward ratio, if we tighten it up, I just wanted to kind of show you there that it does offer the ability to get a little bit tighter with our risk management and our asymmetrical risk reward, and potentially over the course of a year, if you do that a few times, you can really find yourself winners in the 2, 3, 4 times risk. So yeah, so just a little quick discussion of what I do. Nothing in the US dollar for me is jumping out. We have the pound USD. Like, to me, this is more upside. And anything, this could be a rejection coming down here, but to me, this is more upside. You've got a strong rejection, it's against the pound. And then you have price consolidating, kind of taking a breather. There are those triangles again, and it's I don't know. I just don't have an opinion on the US dollar at this point in time, but let's move on from there. So we've got the odd against the US dollar. It's kind of coming up into an area where you now have that 200 EMA again. Nothing really speaking clearly to me. Looking left as well. Um, you are in a theoretical downtrend, so this is something that I'm going to sit on my hands again and wait for a better answer. This was something I took last week only because we're trading those extremes, and I just highlighted that for you on those other charts. We have a bunch of reasons. We have a descending trend line. We have a 200 EMA. We have multiple long wicks. I took it here. I believe my stop is up here on my other account. And you can see that I'm kind of looking to get out here, looking to get out here. I have this line here is probably an alert that was set at any one time. Um, but I don't know. I really just don't know with this. It's an active trade on my other account, so I'm just leaving it and we'll see what happens. Because remember, it's just one trade. I don't have the house on that one trade. I have 1% of my account on that one trade, and maybe even 0.5% depending on when I entered. I don't like holding, especially the Swissy over a weekend, but I did, and I think it was actually an issue of mine that I didn't get out. But it's a small trade, so even if it gapped up, we're not talking catastrophic loss or gap down or something like that. Um, so yeah, I don't know. This is moving on. This is the New Zealand dollar against the U.S. dollar. I'm not interested until we start getting up into these areas, and it has a little bit further to go. You have support area, pardon me, resistance area here, here, but price isn't there yet. Price isn't at that 200 EMA, and I know we have, you start dropping down. We have these sort of double peaks, but I'm trading dailies, and there's just not as much conviction for me at this point. If I started to see wicks like that, I may hop in there. I may be interested in getting in there, and but at this point, while it's had a nice run up, I'd want a little bit more conviction till I even found a small scalp to the downside. Potentially is what I'd be looking at. So moving on to the US dollar. So US dollar, we got to be careful. It is tied to, or pardon me, the US CAD, it is tied to oil. Oil is a challenging gal as of late, but it has had a very nice run back up, kind of reversion to the mean, falling back into those EMAs. And anyone who thinks that technicals don't matter, like start looking at look at these EMAs. Now this is an EMA that I use a lot, and it is highlight that for you. Um, it's my 55. A lot of people use 50 and the 200 EMA. I'm using a 55 for various reasons, but you can see that this price pops into the zone and respects it. You can even see like almost to the cent. It comes up, kisses that, drops away, and these are going to be very heavily scalped. We start getting down into the smaller zones, and they're probably going to even start to correlate with other EMAs that people are scalping with a lot. I'm kind of on the hunt at this point, but yeah, like you're just going to see where price comes up, gets rejected, and drops away. Where were we here? And on the daily, these EMAs have value, that they do matter. Uh, I don't know. I'm not so bearish on oil right now, but we are under all the EMAs, even on a daily. And um, if you look at the weekly, you get a wick like that, and that is just gravy. A high wave candle like that, spinning top, you could call it. It's not a doji because there is a body to it, but something like that, that that's going to at least have a run up, and so gives us an idea to maybe, okay, we've had that run up. What's the downside look like for oil? What's the upside look like for oil? And we pop over to our US CAD. Now, on a weekly, if you were to trade this, these are patterns where you have that run up, the kind of the relaxation. The word's exactly escaping me right now, but where retracement, where it retraces back into a zone, and you're finding that 50% fib level is my sweet spot where I get back in, and I think there's probably a long, but it's that's because US CAD is being played off of oil, and I want that to be clear. When we're looking at technicals, you have to be careful with some pairs that are so heavily correlated with commodities. When you look at commodities such as oil, gold, that sort of thing, they are tied to some of these pairs. And you have to, well, I'm not just trading the US dollar, and you have to then go in search of the best way to trade the US dollar. And so there's a lot of gotchas in this game. But stick around, and over time we will highlight those areas, and we will learn to earn together, because you're going to see over time. A lot of people, when they ask me starting to do this, I could just sit there and come up with some BS terms to make my own system. But I didn't design any of these systems. I have found unique aspects of these systems myself, later to be confirmed that other people have found them as well. So I'm proud that in my own research I discovered this, but this has hundreds of years of history behind it. And that's something that I really promote, is that this started with the 16th century Japanese rice traders. And all we can do is learn and study from them and the lineage from there. There's no one on TradingView, there's no one on all these scam Forex sites that are going to be talking, and some of these charts that are out there are insane. And there's Gann fans everywhere, and Fibonacci, there's colors everywhere. I saw a chart where someone had 11 indicators up and 11 indicators down. The indicators were maybe 1 inch wide, so you can't read them. And then his price action was 1 inch wide as well. And we need to just take a breath, look at charts, understand we're trading against computers and millions of other people, and emotion and greed, and just let it play out, and let it roll out. Let price come to us, let the market come to us, that we're not chasing it, that we're patient, we're disciplined, and you have yourself a winning system at that point. So we have a run up, we have a retracement. We could look to get long if you wanted to trade that, because I think it needs to relax a little bit. It's had that nice little run up, in my opinion. And it's now up into these resistance zones, and maybe it has further downside. I don't know. That's crazy to me, but crazy things have happened. It was negative a few weeks ago. So I think it needs to relax a bit before it runs up. But let's get back on track. So we have in the US dollar, I'm not in any trades, and just highlighting that again. Now, I noticed this earlier, that here, like, you have such a beautiful run up, and it's broken through a lot of levels. If you look left, it's blown through a lot of support levels. It gapped up, it closed that gap. And when we start getting down to the nitty gritty of a lot of this stuff, you can start to see that this is a support area. This is a place where price will start to matter. And you can start to see a little bit of indecision in these candles. You can see that there is a green a bullish candle developing, and we're very near a zone. You can see if we drop down, this is a 4-hour chart. You can see that we are starting to see on a 4-hour chart, which is not nothing, that we're getting a little MACD divergence. You can see that we're in a trend line. In a trend line here, we have MACD showing us a little bit divergence, where the trend line is traveling up, but the trend has been going down. And if you go back to our RSI is oversold. This is, I'm just highlighting areas of interest for you, and I'm not telling you what to do, but we're just breaking down the 24 or so charts that I have today, and we'll just chip through them. So this is something that I know I'll be looking at, and what I like to do is allow the market to relax, especially on a Sunday. What I do is I change my colors to red, as it's something that I want to keep an eye on. But I think the Euro CAD is sizing up for at least, I take trades that as they move as they move up, I'd be looking to get to break even in and around here. If it blew through that, great, but that would be my ultimate level, would be in and around this area. I'm a swing trader that can take time to get there, but I'm not holding that to here or here. I'd be holding in that to there for maybe a small position, but I don't think I don't think you're going to be holding it up to here. Some guys will trade that way. That's more position trading to me. And you want to start watching what your swap costs will be. Off the top of my head, I don't know what that would be on the EuroCAD. You might even get paid a little bit for it. But yeah, so this trade, this area of interest is something that I know I will be keeping an eye on, and we've marked it and made a note on our flag. So we're just working charts at this point in time. This chart here, the Euro Japanese yen, going back to that whole breakout, change of polarity, I'm going to allow the market to relax a little bit. But if you look at this area, now I jump around a lot when it's areas of support and resistance. What indicators I use? Sometimes I use the lines, sometimes I use my zones. But just bear with me. And over the course of 3 videos a week, you'll kind of see the patterns and you'll see what I'm roughly looking at. But we have to set ourselves up for failure, and that's something I really want my subscribers to understand, is that I am constantly talking about risk management. You can really suck at this game, and over time, if you manage risk accordingly, you'll probably be a profitable trader. But it's the managed risk, and that's a double-edged sword, because when you do poorly, you want to earn it back, manage risk. When you're doing well, you think you're on fire and invincible and can't get hurt by the market, manage risk. Okay, guys, so that's my message constantly going forward here. So we've had a really strong run, blow through these levels of support. And, that's a pretty strong level that it's dropped through. And you can see we're going back to this area. Now, we've had a breakout to that area, or of that zone, but now we've retraced it and we're hitting it. And it'll be interesting to see what it does. Now, if you zoom in, you can see without this candle here, you can see that price is starting to slow up a little bit. It's not sure what to do. You've got these little diminutive candles. You've got these spinning tops, I guess you would say. And then if we fib it from top to bottom, we are starting to enter the zones that I like, which are the 50% fib levels. But in and around this area, because we have had a breakout, a pullback, a retest, if we can start to see, and it's even hitting a 200 EMA on the hourly, if we start to see these areas of interest, and you can see what I do when I don't know, I don't start dropping down in chart patterns. If I have no idea what we're looking at, I don't start dropping down. If we do have an idea, or hey, it is in that zone, I start to drop down for more reasons to show interest. So you can see what I'm looking at here when we start having MACD divergence. Very simple what we have there. We're hitting the 200 EMA. There's that zone that I've already highlighted. We have another area here of our MACD, or pardon me, our RSI is a little oversold, or at least in the north aspect of oversold. It was oversold there, pardon me, overbought there, and now it's even entering again. So this is what I call confluence of evidence. We have multiple reasons why price has given us reasons to execute a trade. So we have on the daily a breakout, we're pulling back up, we have our 50% fib level, we could set an alert, we've dropped down to a 4-hour, we have a bunch of EMAs there, we drop down to a 1-hour, we're hitting our 200 EMA. This to me would be a very high probable trade to the downside. Now, to be honest with you, the market's been open for a little bit, so spreads sometimes suck, and I would be looking for maybe even a 30-minute candle or a 1 hour candle would be something that I would be interested in. And then we would be looking for downside. So I'm going to mark that one as well. And moving on to the euro pound, pretty choppy to me. Not really sure what we are doing there. It's not nothing speaking to me, and I'm going to move on. So here we have the Euro Swissy. I don't really trade a lot of these, but I know a lot of you guys enjoy having uh, quite a few charts broken down. And if you're new to this, then this is great for you for practice. So I have 24 highlighted charts that I'm going to be going through. Correlation is a big deal, but you'll also see, especially when it comes to US dollars, that a lot of the time it's if you don't know on one, you don't know on most of them. So it's something where I'm just going to keep trucking and nothing's jumping out at me here. We're obviously in a somewhat of a support area. Um, like to say that that is showing strength to the upside, down downtrend, but then and this is on a 1 hour, so maybe I should even get a little bit higher here. So you can see a strong downtrend. You can see some divergence in the MACD for sure. Yeah, like it's something I'll be keeping an eye on. It's not something I trade a lot, so I'm not even going to mark it. But if you guys want to keep an eye on it, these are areas of interest. We've had it almost in the oversold area. And if we drop down, um, yeah, it's definite weakness showing here in the MACD, and then for this pattern to be just somewhat flat. Um, yeah, it'd be interesting to see what happens there. So the odd CAD is same thing. I think there'll be odd weakness this week. It's been a really strong run for it, especially on another pair, like um, like the odd New Zealand. I think it's coming up to a little bit of being gassed in my humble opinion here. So now you're dealing with two commodity currencies. It'll be interesting to see, these numbers. Let's go to let's go to oops, my keyboard. Let's go to the Forex Factory, the calendar here. Use it all the time. So we have New Zealand news coming up, um, and you can see my local time is -6 GMT, and yeah, so we have some New Zealand news coming up, which we're going to be careful of because it is red flag, and that's an hour and some odd away. But tomorrow, nothing's jumping out. Now, sometimes these yellow flags can really nip you, so just be careful. But already looking into the week, we have our US dollar on Tuesday. So let's let's keep that in mind. We're not jumping into any trades right now, anyways, and let's see what we get ourselves into this week. Um, it's a tough one. It's a tough one. This is into a lot of areas. It's not a pair I trade a lot, but I'm highlighting it for you guys here. So the pound Swissy, yet again, it's not anywhere that I'm excited about. It has had a run up. I would expect maybe even a little bit further. You're kind of drawing your triangle here, um, and yeah, it's nothing speaking to me. If we can get, as we trade, if we can get a couple quality trade ideas a week, we're doing well. And I was speaking to a professional trader, and he says if I can do 1% or so a week, I'm happy as punch. And if you think about it, 6% a month in gain, which some guys can do in a good week, is 100% a year. So just allow, and there'll be some times where you have no um, trades that pop up. There'll be times where you have a lot of trades popping up. And as we approach those situations, we'll discuss them to see which one is the best one. And then bake in risk management and money management, asymmetrical risk reward, and you got yourself a winning strategy. Okay, so the real goal here is longevity, and there'll be times where we as an individual cannot get anything right. I've been there. There'll be times when the market is not providing anything that we're used to. I've been there. There'll be times where you just really suck. And the goal is to get through those periods, to get back into the winning periods. And I'm just going to have a quick little ramble here. But when you go to the casino, and the analogy, I don't want you to think this is a casino because it can be a casino, but we're not going to treat it that way. We're going to treat it with risk management. We're going to treat it with respect because it can really provide. And I'm going to show you how it can provide very simply. When you go to a casino and you go to roulette, the chances of, now I know the greens in the roulette wheel skew this number slightly, but let's, for theoretical reasons, pretend that there's only black and only red. The theoretical chances of us getting a red is 50%. The theoretical chances of us getting a black is 50%. It does not matter what the last roll of the ball landed, where it landed. It does not matter. The machine does not know that. It does not calculate that. It is all probabilities. So knowing that if it's only 50%, 50%, going forward, why is it that when we look at that tree, we have a tree of red, or on the tree of the last places where the ball has landed, you get these clumps, you get these clusters of red, clusters of black, clusters, or no, rarely clusters, but you get that odd Hail Mary of a green one in there, and we've all been a part of that where we just got lucky. We were on the right side of a major news announcement, and that's to me is what the green area is it just those lucky ones or the very unlucky ones. But in a system that we're trading, if you look at the tree, why do we get those clusters of reds and those clusters of blacks? In trading, those are a perfect depiction of our winning streaks. It's a perfect depiction of our losing streaks. And what we have to do is trade our system diligently to come out the other side of that, either richer or not as broke. And I know that sounds crazy, and I don't want to have to let that system play out, but that's what you have to do. You have to trade with risk management and allow a system to play out. So I'm kind of rambling here, but this is I know a lot of you will be introduced to my market analysis, so I just want to have people hear my voice, hear how passionate I am about this, how much I love this task and this job and this profession. But I want you to understand that it really becomes a craft more than it is chasing that dollar and showing your buddy your winning trades. And those are not the clients and the members that I want in here. I want people that are excited about learning a skill that could be generational. And that's where my heart is, young children, and I want them to learn this skill. So let's move on. We're in a triangle. We're not going to be doing anything until we start getting into the extremes of the areas that we're looking to trade. We don't have to know everything all the time, and I hope that's really resonating with you guys right now. That I'm not sitting here telling you you'll be rich tomorrow, because it's probably not the case. I say that right on my website, that hey, welcome to the community. We can learn this, we can profit from it, but the system has to be very clear that this is not an overnight success. So once again, I think there's better trades out there. This week, I'm just going to let the market tell me what it wants to do. And to me, I just need things to break out. If gun to my head, if I had to make a decision, and I always preface it with gun to my head, we've had a break to the downside, I'd be looking for a little bit more downside this way. But I would not trade that. Moving on. So the odd yen, once again, I would want, it's pushing up. I'd want it to at least come up to here till we made any decisions. And I know you guys are integrating with the software, but let me just show you something that I have used all the time. So you set that line, and when you come up to this little clock with an add an alert plus symbol, you click it. And I do this all the time. So it has to cross that line. only beeps once. It's open-ended, meaning I don't set any time to it. Excuse me, that I have over here all my alerts that are set that I'm waiting for things to get to my level, and sometimes it's months till it gets to my level. It's a really large macro view, and I'm happy with that. So I don't have it send it an email. I have it sent to my phone. It pushes to my phone and on the app, and from there I create the alert, and you can wait and you can see that it's now set an alert. That is a server-side alert. This is a beautiful thing, and I might even lock that line so I don't accidentally touch it. But if it gets to that 200 EMA, I might get to uh, get an alert that gets me into a trade idea. That is a great idea, and maybe I can go down here. So I should have highlighted that before. I can write 200 EMA. Maybe I write good short, and I add a question mark because I want it to be known that I'm not saying short now. I don't want to open up my phone and get a bias or a panicked event that I have to short something or rush into the market. If you wanted, a lot of the times you could start opening up your risk management, and you can um, input on there your lot sizing. Now I don't promote trading off your phone, but if you already have a view and you know what you're looking at, and on your phone you see a beautiful candle pattern that has presented itself up in the area that you've already highlighted, and you've already run your risk management tools, so you know how much to get into and where your stops are and where your take profits are, then that's something that you could realistically trade off your phone from. So let's move on from here. So this is the odd New Zealand. Now it's green because I'm actually in it. I'm in it at this level. I don't really know whether it's going to show any more weakness. If you look back at the week, I shorted it because I mentioned that confirmation squared that I commit to so often. If you look at that, this is an example of me using this trade. So here it's come up. Now it has come up all the way to the 50, and it even, I know this is a little on the tight side, but um, so we've had our candle pattern, shooting star on a weekly with a 200 EMA trend line to add to that confluence. It matters. And so I took the trade. I was set at the 50% fib level. My stop is above the candle. Completely in this scenario, I didn't want it to be down here, and I think we're going to roll over. Now this is on a weekly, and so it's it's going to be um, it's going to be pretty strong. And I highlighted this idea as well. It's in my logged ideas. But you can see that even if you ran, your level or projected it out, this is this is what I call um, this is what I call a strong trade. You have price coming down. To me, I think this is a pullback to further downside. Now, downside would be in and around here. So looking left, we have this area. We'll have a whole cluster of EMAs by the time we get there. And yeah, so we're going to wait till that happens. I'm in the trade. We've pulled back. I'm looking for downside, and all we can do is trade well. And we don't have to trade often, but trade well. And this is a trade that I'm currently in. So the euro odd, and let's just make sure we're reset. The euro odd, we can see, talking about EMAs, we are now sitting on a we're now sitting on a 200 EMA, and if you look back, like, it is kissing that, and that's going to matter in some regard to traders. Let's see what. So you can see that it's produced a hammer here, but we've pulled back and we're sitting right on there. So, let's just highlight that area. I'm interested to see what's going on. Oh, someone's trying to talk to me here. But yeah, let's wait. Let's sit on our hands. I'm constantly promoting patience, and let's see what that does. And this will not take you long. Like, okay, so we're on the euro odd. We're coming to the end of our analysis. If you click on your top chart and you just start hitting the space bar, It does not take you long to see, oh, okay, oh, it did get up to that level. It does not take you long throughout the day. I remember when I first started this, I was, I remember reading, thinking, I have to log in every day. I have to log in every day at 5 o'clock to check the candle closes. I remember just being so thrown off, like, oh, that sounds like a big commitment. Well, project 4 years later, and here I am. Sometimes my computer's on all day, and so I'm watching things as they travel, and I do scalp, and we can get into that later on. But I'm a better swing trader than I am a scalper, and I have software in the background that audits me and tells me straight up, hey, Matt, I know you think you're great, but it turns out you're not that great in this area. And so if you know something that's telling you you're not that great, then it might really benefit you to listen. Hey, you know what? I'm really not that good trading the S&P 500. I have more losses than I do wins. Is it a good idea for me to continue trading it? Or, it looks like Friday. I'm not very good at this, and so it's software that I like. It's called Journalytics, and it's about 400 a year. If you're going to get into this, you need to start understanding what you're all about and the actions that you're taking, and have something auditing you in the background. So anyways, let's move on. This is setting itself up for a long, or it's setting itself up to drop right through. But let's wait for the candles to start engulfing, to start giving us candle patterns such as hammers, dojis to show us, hey, a price is slowing down. That confusion is building. People are building their positions or getting out of them for us to make decisions. Tiny little candles like this, I'm not interested. On a Sunday night, not interested. I find if I just wait for that week to unfold, even if it does confirm to get on and we missed it, we have that confirmation squared technique that I have highlighted in the free training and on YouTube, showing you that you can get back in. Never fear it. I watch the US dollar and the Hong Kong dollar. I watch it. You can see that these have been set up for quite some time, this chart. And, going back here, I'm watching it. I think there's upside here. It's already starting to show a little love, but we're going to wait. We're going to wait, sit on our hands. I don't know if I'll trade that. I don't even think it's available, to be honest with you. I'll wait for strong signals to get in. Bitcoin. I know a lot of guys are interested in your old Bitcoin. I highlighted this idea. I'm not loving it. I'm not loving it right now. I don't think you can see these crazy drops. Like, I don't trade it because I don't have any access to it. The broker that I use, Think Markets, has been a good broker to me, but they're not open on the weekends. I have to back them up. They see crazy swings in price action, and they start to adjust it to protect traders from themselves, because you get these moves in the market, and their support's going to be blowing up because of this. Oh, why am I out? You're stop hunting. Everyone cries stop hunting. But what we're going to do is, I'm not going to trade this. We're going to sit on it. I don't really appreciate price swings while the market's closed of 20%. So I'm just going to leave it. Not interested. But I know a lot of guys out there, oh, you technical traders, there's no value in that. When you start looking at that and where this candle was so strongly rejected, you let me know whether technicals matter. And as we unfold these weekly chats, you will see that technicals matter, and that's what I trade off of. Okay, so let's move on, and we have the S&P now. I'm in this as well. It's an idea that I highlighted. Let me just get rid of this, clean it up a little bit. So on a weekly, let's do a little bit more of a macro view here. You can see, like, look at that candle. Strong rejection in the EMA. So it's a weekly shooting star candle after it's run back up. Let's just delete that. But let's get into a fib. We're going to fib from the top to the bottom. And you can see we've hit that 50 level, but we're now at the 61.8. We're now in a bunch of EMAs, and we have a shooting star. And if you were to, that's on a weekly. And so if you were to start dropping down charts, you're going to see that we're now at a daily 200 EMA. We're starting to show some divergence in our price action. And I'm short on this. I've already taken the short. It was one of my highlighted ideas. There it is right there. And there's silver as well. We'll get to that in a minute. But I'm short on this. I have at least to here because we have more support showing up. But that's a trade that I've taken, and I even let that over the weekend because I see more downside. I'd be very careful trading something like gold over a weekend. If one of those Hail Mary, if you think back to the roulette wheel, you think about those green events, those absolute horrendous events that can happen globally that move the markets so aggressively. I would not want to be short gold over a weekend because I can't think of any situation where gold would just disappear through the basement. But I can think of many situations where gold would skyrocket over a weekend. So I'd be careful, being long the S&P 500 over a weekend, but I did hold that, and it's risk managed once again. I did hold that position in the short over a weekend. All right, let's move on. So this is a trade that I have lined up. I've already highlighted that, telling you guys this, but you can see looking left that we have even um, more reasons to take that trade. So let's move on a little bit here because gold, or pardon me, oil. Oil is an interesting one. We already talked about it a little bit in this rambling uh, market analysis. You can see it's pulled down, dropped, went through the basement, and then it's pulled up into this level. I would wait for it to tell me what it wants to do at this level. I would very much expect it to pull back and then carry on because I see my personal feeling is this pandemic is kind of, people are over it. People are ready to get back to work. People are excited about being done with it. We've had, while it's been a terrible situation and hitting economies really hard, it's something that I I think people are kind of mentally getting over, and businesses are open and travel is happening, and that's where are we? May 10th right now. So we'll see what happens. We'll see what happens, but I'm just going to wait for oil to tell me what to do. I'm not in that position at all. So let's move on. I do have a silver position on right now. It's one of my ideas that I highlighted, and I highlighted it on May 3rd. I am long it at this point, and I'll tell you that it's an interesting oh, pardon me, this is gold. I was like, wow, this has really run up. So pardon me, this is gold. I'm long in another portfolio. I'm not long in my other CFD account, but I do physically hold gold. Just a perpetual bull of gold. It's so beautiful, and so we've had a breakout above this support level, or pardon me, this resistance level, which is now support. That whole change of polarity, it's come up, it's pulled back, and it's showing that it's building support there. And I think that it's going to make another run. I'm not in it. I'm not making that move or that choice at this point, but that's what I think will happen. So let's wait to see if there's anything major with gold that gets us in, or maybe it comes up here. We can grab a short. We're at the 1700 mark. Woohoo! All right, gold. So let's just keep an eye on it. There's always trading opportunities. So this is my silver idea. You can see that I'm in it, and it ran up. I'm gonna delete that, or maybe I'll just do that. So it's had a run down. It's pulled back up, and it's gone sideways. And for me, it found support. There's that level. It found support here and here and here and here and here, and then it's run off. And for me, I'm up. I'm upside. There's starting to be resistance there. There's your 200 EMA. I think on the weekly it doesn't look much more exciting, but yeah, we got to wait till we get up here before we start looking for shorts. But I think this is it's going to be super cheesy. My kids would call it a dad joke, but this to me is going to be a run up, and it's going to be silver's time to shine sort of thing. And yeah, I'm up here. I'm waiting for these areas. I probably should. I'll show you what I do with my. What are we going to say? Um, Quite the run up, and just that's all I do. So that if it hits my phone, I'm like, oh geez, like if something major happens, I know, oh, that's a level that I set, and it's going to be way up there. So I do lock them so that because that alert will free float with this line, and if you bump it or nudge it, it will move. So you can see I can't move it right now. You unlock it, and I can move it, and then that alert goes anywhere that that line goes, and it doesn't alert you that you've moved your line. So just a little trick of the trade. Currently, I don't have a ton of content in the educational side of things. I expect most people to come to me with at least baby pips under their belt. And I'm going to tell you now, if you find baby pips too much to handle, stop trading. There's too much knowledge to be acquired in this game, and if a couple weeks of work is too much for you, then just empty your account or go demo and until you find the passion and the fire to learn this stuff. But if I have spent thousands on books, physical books, 800-page textbooks. I've written exams. This isn't boastful. I'm just telling you what it takes to finally kind of see the market the way it needs to be seen. And maybe I'm not the quickest study, but it takes a long time to see what you're seeing and to overlay the psychology aspect of this and to not make this just a game in a casino. But if you can't get through babypips.com, which is free, give them an email, logs your progress. They never even like spammed me or anything. If that's too much for you, wrap it up. I wish you the best in whatever other endeavor you choose because this is not for you. This takes dedication, it takes time, and over time we'll learn that. But I expect people to come to me with a foundation of knowledge that you understand some candle charts and some wicks. I'll help you along the way, but through my ramblings of weekly breakdowns. But the 200 EMAs, 550 EMA, pardon me, so 250 EMAs, and then moving down to other EMAs, understanding, golden crosses, death crosses, what people are looking at makes technical analysis a self-fulfilling prophecy, if you will. These areas that I'm looking at, other people are too. So that is where this becomes valid, is that you have so many other computers, so many other people looking at these areas of interest, and that's all we can do. There's also, I could show you a million areas where it's coming up to the 200 EMA and it blows right through it without even stalling. So over time, we'll just understand risk management, asymmetrical risk reward, and I'm going to become a broken record for you. But over time, that broken record, it's going to be watch me, watch what I do, and you can profit in this. So another index that I just watched, the Hang Seng index, I like watching the Asian indexes. I find Hong Kong interesting right now with the coronavirus, with a protracted protest event going on. And so it's just going back to my other trade with the Hong Kong dollar, and I just want to see what's going on. I just like keeping an eye on things. Currently, this would be an interesting area for me to trade, but this is kind of a floating chart, and maybe this is a good time for me to wrap things up. But while we've been sitting here, this has been almost an hour I've been rambling on, and let's see if anything. No, nothing's changed. So there's never a rush to get into the market. There's never a rush to run around and get our trades in. We have all the time in the world. This US dollar is gapped up on me. I am short. I highlighted that earlier. And we'll just see what's going on. I might start ratcheting down those if when it comes to Tuesday, we haven't done much or haven't gone very far. I'll be careful with those. That's 6:30 in the morning, sometimes even before I even wake up. So I'll just be careful with those economic news events. And yeah, I can't think of anything else to say. I thank you very much for watching this video. And this is going in the members area, or pardon me, on Facebook in the group, and it'll be sitting there hosted on YouTube for you to watch at your leisure, and we'll go from there. Thank you very much for watching, everyone. Let's see if I can pause this now. Perfect. All right, talk to you later.